Right now, the U.S. markets are closed for the Thanksgiving holiday, so we are looking at the final closing data from the last active session, Wednesday, November 26th. Rezolve AI Limited, ticker symbol RZLV, finished the day trading at exactly $2.98 per share. We saw a slight pullback in that final session, dipping just under 1%, specifically down 0.67%. While the holiday pause gives us a moment to breathe, the chart tells a story of a stock that is coiling, sitting at a market cap of roughly $956 million. You might look at a $3 stock with less than $6 million in trailing revenue and immediately dismiss it as another vaporware cash burn, a company riding the coattails of the current artificial intelligence enthusiasm without a real product. That is the expectation. You see the low share price, the massive volatility, and the relatively thin revenue streams, and you assume this is just another speculative play destined to fade into obscurity once the hype cycle dies down. But here is the reality that forces you to pause and look closer. This isn't just a small cap trying to make noise. This is a company that has secured a massive strategic validation from one of the most powerful entities on the planet. I am talking about Microsoft. This is not a vague, "we use Azure" press release. This is a confirmed $130 million go-to-market commitment where Microsoft is actively incentivized to sell Rezolve's proprietary Brain Suite to its own global retail clients. When the creator of the Windows operating system and a primary backer of OpenAI puts 9 figures of sales muscle behind a specific commerce application, you have to stop treating it like a penny stock and start analyzing it as an infrastructure play. The gap between the penny stock perception and the institutional infrastructure reality is where the opportunity and the risk lives. Let's talk about what is happening on the chart and in the order books right now. Before the holiday break, we saw volume coming in at around 12 million shares, which is slightly below the average daily volume of 15 million. This consolidation at the $3 level is critical. It acts as a psychological line in the sand. When you trade stocks on platforms like Fidelity or use a refined Fidelity trading platform, you often look for these periods of compression. The stock has touched a 52-week low of $1.07 and a high of $8.45. We are currently sitting in the lower third of that range, which technically places it in a potential accumulation zone, assuming the fundamental thesis holds. The volatility here is high, much higher than what you would find in blue chips like Apple stock or even the more aggressive NVIDIA stock. This is a name that moves 10–20% on news, not quarters of a percent. For those of you managing your own capital through a Schwab Intelligent Portfolio or doing self-investing on an individual brokerage account, you know that this kind of volatility requires a stomach of steel. But volatility is just price exploring for value, and right now the market is trying to figure out if Rezolve is worth $1 billion or $10 billion. The core of the bull case here, and the reason we are talking about this script length and depth, is the specific problem Rezolve solves. Think about the last time you bought something online. You went to a website, you typed "running shoes red size 10" into a search bar, and you got a grid of photos. That experience has not changed in 20 years. It is static, it is dumb, and frankly, it's inefficient. This is what the industry calls search-based commerce. Rezolve is building agentic commerce. Instead of searching for keywords, you talk to the store. You say, "I need a pair of shoes for a marathon in wet weather, and I have wide feet." And the AI understands the context, the inventory, and the nuance, returning a specific recommendation rather than a list of links. This is powered by their proprietary large language model, Brain Power. Now, you might ask, why not just use GPT-4? Why does Rezolve need its own brain? This is the billion-dollar question. General-purpose models like the ones powering ChatGPT are incredible at writing poems or summarizing history, but they are terrible at knowing exactly how many size 10 Nike Pegasus shoes are in a warehouse in Ohio right now. they hallucinate. They make things up. In retail, if you hallucinate stock levels or pricing, you lose the customer. Rezolve's model is purpose-built for commerce, meaning it's trained on product data, SKUs, inventory levels, and transactional logic. It is designed to be accurate, not just creative. This distinction is why the Microsoft partnership is the anchor of this analysis. Microsoft dominates the enterprise cloud with Azure. They have thousands of retail giants, Walmart, Kroger, massive global brands running on their rails. These retailers are desperate to use AI, but they can't risk their brand reputation on a chatbot that tells a customer a product is in stock when it isn't. Microsoft knows this. By partnering with Rezolve and integrating the Brain Suite directly into the Azure Marketplace, Microsoft is essentially telling its customers, here's the safe, effective way to deploy conversational AI for your store. They are validating the technology in a way that no amount of marketing spend from Rezolve itself could ever achieve. If you're watching this and you trade on Robinhood, maybe utilizing the Robinhood app for your Robinhood investments, you often see partnership news pop up and fade away. But a go-to-market commitment is different. It means sales teams are getting paid to push this product. It aligns incentives. Let's shift gears to the financials because this is where the bear case has its teeth, and we need to be honest about it. The trailing 12-month revenue is around $5.3 million. That is tiny compared to the nearly almost $1 billion valuation. The price-to-sales ratio is astronomical. If you're a value investor looking for low PE ratios, you should close this video and go look at a bank stock. This is a growth equity. You're paying for what the company will be, not what it is today. The company reported a net loss of over $28 million in the last period. They are burning cash to build this tech and secure these deals. This is classic pre-chasm technology investing. You are betting that they cross the chasm from early adopters to mass market dominance before they run out of money. The company has raised significant capital, including recent funding rounds, so the runway is there, but the execution risk is real. When you look at your SoFi Invest dashboard or check your SoFi stock's performance, you need to balance these high-risk, high-reward plays with safer assets. It's not about putting the mortgage on RZLV, it's about understanding its place in a diversified portfolio. Speaking of portfolios, I want to hear from you. Comment below how many shares of Rezolve AI you currently hold, or if you are waiting for a specific price point to enter. Are you watching that $2.50 level, or are you waiting for a breakout above $3.50? Let me know in the comments. Now, let's widen the lens to the sector momentum. We are seeing a rotation. For the last 2 years, the AI trade was all about the hardware. NVIDIA stock, AMD, the chip fabs. Then it moved to the hyperscalers, Microsoft, Google, Amazon. Now the market is looking for the application layer. Who is actually going to make money using these chips? Who is building the software that changes how we live and work? This is where Rezolve sits. It's the application layer for commerce. If the hardware trade is the first inning, the application trade is the second and third inning. This puts Rezolve in a very interesting spot relative to other speculative tech names. Unlike a biotech company waiting for FDA approval that might never come, Rezolve's product is live. It's working. The challenge is scaling sales, not inventing the physics. The Brain Suite consists of 3 main pillars: Brain Commerce, Brain Checkout, and Brain Assistant. Brain Commerce is the conversational engine we discussed, talking to the catalog. Brain Checkout is perhaps even more disruptive. It allows for instant checkout capabilities from anywhere: a QR code on a billboard, a link in a video, a voice command. It reduces the friction of buying. We all know the pain of filling out shipping forms on a mobile screen. If Rezolve can eliminate that friction, conversion rates go up. If conversion rates go up, retailers will pay handsomely for the software. Brain Assistant is the internal tool, helping employees find information, manage stock, and handle logistics. It's a holistic ecosystem. There is also a macroeconomic angle to consider. We are in a high-interest rate environment, although rates are expected to soften. In high-rate environments, unprofitable growth stocks usually get hammered. We saw that in 2022 and 2023. But as we move into 2025 and 2026, if the cost of capital comes down, risk on assets like RZLV tend to outperform. Investors start chasing yield and growth again. You might see this shift discussed on Fidelity Wealth Management blogs or in the newsfeed of your Interactive Brokers trading account. The macro tailwind could be forming just as Rezolve's sales cycle from the Microsoft deal starts to kick in. It's a potential convergence of favorable conditions. However, we must address the competition. Rezolve is not the only company trying to solve search. Google itself is pivoting to AI search.